Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and on this edition, I'm going to give you an entire wrap up of the day's trading session. Well, it was the third trading session when the markets have slipped in trade. In fact, in the last three odd trading sessions, the Sensex has lost 2,000 points. Yes, it's been a sell off that we've been witnessing constantly. The opening was weak, and throughout the trading session, it was a very, very volatile and a choppy session that we witnessed. And not just the benchmarks, it was all across broad-based kind of a volatility is what we had seen throughout the trading session. Towards the end of the session, let's quickly look at what were the closing levels. 634 points gone there for the Sensex today, over a percent cut yet again, 59,464. So not just 60,000, but even 59,500 have gone. For the Nifty, it was down 181 odd points or over 1% cut yet again. And the Nifty has also slipped below the 17,800 mark as well. So keep that in mind. Remember, we'd been talking about how experts on our platform have been talking to us, and we've been communicating it to you that the Nifty may be doing some kind of showing some kind of a selling off spree, and that's exactly what we witnessed. The levels that they had been talking about as the support levels for the Nifty was 17,700, and we are now very, very close to that. Now we'll have to see whether tomorrow's trading session brings back the Nifty and the Sensex from these low points, or do we see some more cuts on the markets? Now, as far as the stocks are concerned, about 5093 shares advanced in shares in the trade today, 1606 shares declined, and 64 shares were unchanged. As far as the sectoral indices are concerned, except for power, realty, and metal, all the other sectors were trading in the red, with autos, IT, pharma, and FMCG indices down about 1 to 1.5 to almost 2%. The broader markets, mid cap and the small cap indices, however, ended flat. They did better than the benchmarks. They've been doing better than the benchmarks over the last two odd trading sessions as well. In terms of specific stocks, it was Bajaj Finserv, Infosys, TCS, and Divis Laboratories and Bajaj Auto that were the top Nifty losers. Remember, Bajaj Finserv reacting post its earnings, Bajaj Auto also declining in trade post the earnings, while gainers included the likes of Power Grid, Bharti Airtel, Grasim, JSW Steel, and Britannia Industries. Now, a whole host of factors are behind the kind of move that we've been seeing on the markets. Of course, the few reasons that we've been constantly, repeatedly telling you about are the concerns on inflation, the concerns on rising interest rates, the rising US yields, which is creating some kind of a pressure on the global markets. But it was surprising to see the kind of decline we've seen in the Indian markets, especially keeping in mind that the Asian markets and Chinese markets were still logging in some kind of gains despite the overnight losses for the US markets. Now, we did have one more of number coming out today. India Ratings Research on Thursday said that it expects India's GDP to now grow at 7.6% on a year-on-year basis in FY23. That's the number that's coming out as far as the growth number projections are coming in. Other than that, it was the constant sell off by the FIs and FPIs that's been leaving the Indian markets on a wobbly state. The FIs have been trimming their positions right from the time there has been a surge in the global bond yields and the spike in volatility, which has forced the FPIs to exit some of their positions from the Indian markets and other emerging markets as well. Apart from this, a whole host of kind of focus was on specific stocks that reported their earnings. Bajaj Finserv, for example, said that its consolidated net profit for the quarter ended December have declined by 2.6% to 1256 crore rupees from 1290 crore rupees in the corresponding quarter. The company also has said that its total revenue from operations has risen 10% on a year-on-year basis to 17,589 crore rupees, and that's up from 15,959 crore rupees the same quarter in the last year. So pressure on profit is definitely taking away some sheen from Bajaj Finserv, and that's why post the earnings we've seen the stock declining in trade. Asian Paints also came out, big numbers coming out on the D Street today. The revenue were at 8527 odd crore rupees as compared to 6788 crore rupees on a year-on-year basis, jump in revenue. Profit after tax at 1015 crore rupees versus 1238 crore rupees. So that's a decline on the profit from. Firm also announced an interim dividend of 3.65 per share. So that's a positive. So mixed set of numbers, patchy earnings really coming about. The crude oil prices constantly surging, FPI selling out as well. and the pressure being created by the global markets as well. So those are some of the things that are creating some kind of an overhang for the Indian markets. Of course, things are a little different from the last budget. Remember, before the previous budget of 2021 was played out, or like it was presented, before that we were seeing the markets were trading lower, and just after those strong announcements that came about in the budget of 2021, we saw the markets really rallying very, very sharply. However, this time around, we have already seen markets really play out all that bull run before the budget. So that's the question that's coming about. Most of the experts do not expect any big bang announcements to come about in this upcoming budget, and the investors and the markets are somehow discounting a little, a status quo kind of a budget, and very little announcements here or there right now. And that could be a big reason why the markets are showing some kind of a decline from the last three odd trading sessions as well. Well, overall, we'll keep you posted with how the markets progress from here, and what do our experts really make of this kind of a 3 day fall that we are seeing, and whether this will continue to a deeper fall. But as far as today's session is concerned, the last half an hour or the last 1 hour did see some recovery from the low point of the day, and that may give some kind of an encouraging sign for the bulls to come back onto the D Street, recover all these losses that they've made in the last 3 days. We'll keep you posted with all the developments on the markets front as well as in the world of business. And for that, you need to like our video and subscribe to our YouTube channel, and stick with us via our social media handles: Twitter, Facebook, LinkedIn, and Instagram. Many thanks for tuning in.